Hi, welcome back to John Smith 02, and today we are watching something in the silver market that honestly deserves your full attention, because silver has pushed past $62, and in some trading sessions, it even touched the $63 mark. Now, if you have been following this market for a while, you know that silver does not usually move like this. This is a metal that can sit quietly for months, and then suddenly wake up and shock everyone watching the charts. And that is exactly what is happening right now in 2026. So today, let's break this down properly. We are going to talk about why the Federal Reserve's shifting interest rate expectations are playing a role, why the weakening labor market in the United States is quietly pushing money into metals, why falling energy prices are changing the cost equation for silver producers, and why a massive 62.5% surge in Chinese industrial and solar silver imports is adding real physical demand behind this rally. And then we will look at the technical side, the support and resistance zones that traders are watching closely right now. By the end of this video, you will have a clear, grounded understanding of what is actually driving silver, without any hype and without any noise. Now, this is important because silver is not just a shiny metal that sits in a vault somewhere. It is deeply connected to industry, to technology, to energy, and to global monetary policy all at the same time. That is what makes it such a fascinating asset to study. It behaves partly like a currency hedge similar to gold, and partly like an industrial commodity similar to copper. And when both of those forces start pulling in the same direction, that is when you get these sharp, fast moves that catch a lot of people off guard. Let's start with the Federal Reserve, because this is really the foundation of the entire story. For most of the past few years, the Fed kept interest rates high to fight inflation. Higher rates usually make metals like silver and gold less attractive, because when you can earn a solid return just by holding cash or bonds, there is less incentive to hold an asset that does not pay any interest at all. But recently, the tone coming out of the Fed has shifted. Signs of a slowing labor market, softer job growth, and rising unemployment claims have all added pressure on policymakers to consider cutting rates sooner rather than later. And here is what this means for silver. When investors start expecting lower interest rates in the near future, the opportunity cost of holding silver goes down. Suddenly, sitting in cash does not look as attractive, and money starts rotating back into hard assets. Think about it this way. Imagine you are choosing between parking your savings in a bank account that pays a shrinking interest rate, or putting some of it into an asset that has historically preserved value during uncertain times. As that interest rate advantage fades, more people start leaning toward the second option. That is essentially what we are seeing play out across the metals market right now. Now let's talk about the labor market itself, because this piece is often misunderstood. When people hear that jobs data is weakening, the instinct is to think that is bad news for everything, including investments. But in the context of precious metals, weaker labor data can actually be a catalyst. Here is why. Weak employment numbers increase the pressure on the Federal Reserve to ease monetary policy, and metals markets are forward-looking. Traders are not just reacting to what is happening today, they are positioning for what is likely to happen 3, 6, or even 12 months down the road. So when jobless claims rise or hiring slows down more than expected, it sends a signal that the economy may need support. And that support usually comes in the form of lower interest rates. That expectation alone can be enough to move silver prices even before the Fed makes any official announcement. This is one of the most important dynamics to understand if you want to make sense of why silver reacts the way it does to economic data, releases that, at first glance, might not seem directly related to metals at all. Now let's shift to something a little more overlooked, and that is energy prices. Silver mining and refining are energy-intensive processes. You need significant power to extract, process, and refine silver from ore. When energy prices are elevated, production costs rise, and that can squeeze profit margins for mining companies. But recently, we have seen a cooling trend in energy prices. And when energy costs come down, it becomes more efficient and more profitable for producers to bring silver to market. This does not mean supply suddenly floods the market, but it does ease some of the cost pressure that has been building over the past couple of years. Lower energy costs also tend to support a broader environment of easing inflation expectations, which loops back into the interest rate conversation we just covered. So you can start to see how these different pieces, monetary policy, employment data, and energy prices, are not separate stories. They are all connected threads in the same larger picture. Now here is where the story gets even more interesting, and honestly, this might be the most important piece of the entire puzzle right now. China. Chinese industrial and solar-related silver imports have surged by an extraordinary 62.5%. Now let's slow down and really understand why this matters so much. Silver is not just used for jewelry or coins. It is one of the most effective conductors of electricity known to industry, which makes it absolutely essential in solar panel manufacturing. Every single solar panel produced today requires a certain amount of silver paste to conduct electricity efficiently. And as China continues to expand its solar manufacturing capacity at a massive scale, the demand for physical silver has grown right alongside it. Think about it this way. As more countries push toward renewable energy infrastructure, and as electric vehicles, 5G technology, and advanced electronics continue to expand, the industrial appetite for silver keeps climbing. China, being the world's largest solar panel producer, is at the very center of this demand story. A 62.5% jump in imports is not a small statistical blip. That is a significant real-world signal that physical demand for silver is accelerating at a pace that is outrunning what many analysts had modeled for this stage of the year. And this is where it becomes really important to understand the difference between paper silver and physical silver. A lot of silver trading happens through futures contracts and financial instruments that do not involve any actual metal changing hands. But when a country like China is importing real physical silver in these kinds of volumes for actual industrial use, that tightens the available supply in a very different, more tangible way. It is one thing to see speculative money flowing into silver contracts. It is another thing entirely to see real factories, real solar panel producers, and real manufacturers pulling physical metal out of the market to actually build products with it. That is a much harder trend to reverse quickly, and it is part of why this current rally feels different from some of the more speculative spikes we have seen in the past. Before we go further, if you are finding this breakdown useful, take a moment to like the video and subscribe to the channel. It genuinely helps this content reach more people who are trying to understand these markets clearly, without the noise and without the panic that so much financial content tends to lean on. All right, let's continue. Now let's bring in the technical side of this move, because price action is telling its own story here. Silver breaking above the $62 level was a significant moment because that zone had acted as a stubborn resistance area for quite some time. When a metal finally pushes through a level that has rejected it multiple times before, it often triggers additional buying because traders who were waiting on the sidelines see that breakout as confirmation of underlying strength. Right now, the $62 zone that used to act as resistance is being watched closely to see if it can now hold as new support. That is a classic pattern in technical analysis, old resistance becoming new support, and if silver can hold above that level on any pullback, it would suggest the bulls are firmly in control. On the upside, the $63 region is the next area traders are watching, and beyond that, some analysts are eyeing round number psychological levels a little further out. But it is worth remembering that technical levels are not guarantees. They are simply zones where buying and selling pressure has historically clustered. price can and does break through these levels in both directions, especially in a metal as historically volatile as silver. Now, it is important to acknowledge the other side of this story too, because responsible analysis means looking at risks, not just the exciting part of the rally. Silver has a long history of sharp corrections after fast moves like this one. When an asset climbs quickly in a short period of time, profit-taking often follows, and that can lead to pullbacks that feel uncomfortable even within a broader uptrend. There is also the possibility that the Federal Reserve could take a more cautious approach than the market currently expects, especially if inflation data comes in hotter than anticipated in the months ahead. If rate cut expectations get pushed back or reduced, that could cool some of the momentum we are currently seeing in metals. Additionally, industrial demand from China, while currently strong, can also be affected by broader shifts in global manufacturing trends, trade relationships, and domestic Chinese economic policy. So while the current picture looks constructive for silver, it is not a one-way street, and staying aware of these possibilities is part of being a thoughtful, informed investor rather than someone simply chasing a headline. Here is a simple mental framework that might help you make sense of silver moving forward. Try thinking of silver as sitting at the intersection of three major forces. The first is monetary policy, meaning interest rates and what the Federal Reserve is expected to do. The second is macroeconomic health, things like employment data, inflation, and overall growth signals. And the third is industrial demand, which includes solar energy, electronics, and manufacturing use cases, especially coming out of China. When two or more of these forces are pointing in the same direction at the same time, that is usually when you see the sharpest moves in either direction. Right now, all three of these forces happen to be aligning in a way that supports higher prices, and that alignment is exactly why this rally has had the strength that it has shown. Looking ahead, there are a few different paths this could take. If the Federal Reserve does move forward with rate cuts in the coming months, and if Chinese industrial demand continues its current pace, silver could continue building on this momentum, though likely with periods of consolidation along the way rather than a straight line higher. On the other hand, if economic data surprises to the upside, or if the Fed signals more patience than expected, we could see silver take a breather and trade sideways or pull back to retest some of these newly established support levels. Neither outcome should be seen as good or bad on its own. Markets move in cycles, and pullbacks within an uptrend are a completely normal part of how these things unfold over time. So what does all of this actually mean for someone watching from the sidelines, trying to make sense of their own financial decisions? It means understanding that silver's current strength is not coming from a single headline or a single event. It is the result of multiple overlapping trends, shifting interest rate expectations, softening labor conditions, easing energy costs, and a genuine surge in real-world industrial demand from one of the largest economies on the planet. Whether or not silver plays any role in your own financial planning is a personal decision that depends on your goals, your timeline, and your comfort with volatility. And that is something worth thinking through carefully or discussing with a financial professional rather than reacting to short-term price movements alone. To bring this all together, silver's move past $62 and towards $63 is being driven by a combination of a more dovish shift in Federal Reserve expectations, weaker labor market data increasing the odds of future rate cuts, cooling energy prices easing pressure on production costs, and a striking 62.5% jump in Chinese industrial and solar-related silver imports. On the charts, the $62 zone has flipped from resistance to a level worth watching as potential support, while 63 and beyond remain the next areas of interest for traders. As always, the goal here is not to tell you what to do with your money, but to help you understand the forces shaping this market, so you can think it through clearly for yourself. If this kind of breakdown helps you see the bigger picture, Stick around, subscribe, and I will keep bringing you these updates as the story continues to develop. Thanks for watching, and I will see you in the next one.